Good afternoon, everyone. Welcome to closing comments for July 27th. Let's jump right into our charts and see we kicked off the new week. First up, we got our October live cattle on the board. We did see a big red day across the cattle market today. Both live and feeder prices finishing lower on some above average volume, marking some key distribution days for both of these markets. Technically speaking, not a good look here at the moment for this cattle market. This October live contract was probably the strongest of the bunch today, but still managed to finish about 420 lower. Seeing the sellers jump out to a hot start this week, and we should see them carry that momentum over into tomorrow's session. As we look out into these back months, December 26 all the way out through spring 27, all seeing between $5 and $7 worth of losses today, finishing at some new new yearly lows. Not a good look. We should see these back months continue to weigh heavy in October and continue to pull it with it. Sellers are in control here, and we should see them continue to drive this market lower here throughout the remainder of the week. Next up, September feeders on the board. We did see a big red day here in this feeder market as well. September being about the only contract month that didn't finish limit down. We did see October out there through April of 27, all finishing the limit down on the day at some new yearly lows, breaking down below this range that we've been trading in all year long. Once again, not a good look for this feeder market. We got a lot of inventory built up here over the last 7 months. With this market closing at some new yearly lows, we should see the last of these bulls start to throw in the towel, which will fuel that selling pressure here. Look for this thing to keep on pushing down into the 320s. The sellers finish down here near these lows, and we should see this above average volume continue. We should see some increased volatility and more selling pressure here throughout the remainder of the week. If you haven't gotten defensive or started to raise any cash, I encourage you to do so. This market looks like it's heading lower, and we should see both live and feeder prices continue to sell off here throughout the remainder of this week. Next up, we got our December corn futures on the board. This market has been very influenced by the news, similar to this crude oil market. As we can see, we saw a big breakdown in those crude prices after the ceasefire once again here over the weekend. But this corn market breaking down below Friday's lows here and heading back down here towards 470. Good selling pressure here today. But at the moment, like we saw here throughout the spring when the Iran war was really big in the news, we did see this thing kind of hang out here between 470 and 505. So until we give this 470 line back up, wouldn't be surprised to see this market hang around here in the high $4 range. We'll just have to wait and see if the selling pressure continues back down below 470 into the rest of the week. If we continue to find support in this area, look for this thing to continue chopping up here. In the near term, either way about it, this corn market doesn't look like it's going anywhere between 5 and about 4.25, whether or not which end of the range we're going to be in. We should just see these corn prices continue to balance out. Like I just said, big news coming out of Iran this weekend, which pushed this crude market lower. We did see that Sunday night gap open below our bear pivot at 87.50, reclaiming the bottom end of this downtrend line. Big red day on these crude oil futures. We did see this thing pushing all the way back down towards 82 after trading as high as 93.5 last week. With this selling pressure here so far, we'll have to wait and see if it sticks, but we see those sellers jumping out to a strong start. We should see these bears try and bleed this thing back down into the 70s now that we've reclaimed 87.5. But we'll just have to wait and see what kind of news we get. This market is still very news driven, and we could see some more volatility if anything starts to heat up there once again. But in the meantime, as long as we're below 87.5, look for this thing to slowly bleed back down into the 70s. Next up, another big red day here in these equity indexes as well. The S&P seeing a nice gap open off the news over the weekend on the Sunday night futures, but all that upside was given back during the day session. This market pushing all the way back down here off of that 7,500 level, retesting 7,420, getting real close to that bear pivot for the week, testing last week's lows. If we continue to see some selling pressure below 74.11, which was last week's low, look for this thing to really start to unravel. We've had these higher lows start to give up some ground here, starting to bleed off of these recent highs in the S&P. NASDAQ also pushing down into some new lows that we haven't seen here in a couple months. Lots of selling pressure to kind of testing this 200-day average. The laggard, which is now the leader, the Dow, trying to find support overnight. We did see that nice strong rally, but a lot of those gains were given back during the day session as this market saw today selling pressure here as well. We continue to see some mixed action, but NVIDIA was a big one today, down 5%, finishing back below those averages. Not a good look here as the biggest piece of the puzzle for these indexes saw a big red day and lost some major ground. At the moment, that's not a good look while we are heading into some big earnings on these other mega caps. We do have Microsoft, Amazon, Facebook. A lot of these guys still have to report this week, so if they're anything like Google and Tesla last week, we should see some more selling pressure and these indexes start to take fire. So start to raise some cash here as these indexes are starting to weigh heavy. We'll have to wait and see what kind of action we get following those earnings later in this week. Apple's about the only one here that still looks good. Still got a true leader here pushing into some new all-time highs today, up there at 339.5. So that's a good sign. But a lot of these other big pieces of the puzzle just not getting the traction they need. Starting to see some selling pressure here, and a lot of these earnings looming. These earnings that are looming are going to start to weigh heavy if we get some bad reactions to them. So be cautious here, not a bad time. We're starting to see some cracks forming across the board between the cattle market, stock market. Everything's kind of seeing some selling pressure here. And we should see that action kind of continue here throughout the remainder of this week. Not a bad time to get defensive. There's going to be better spots to be putting your money, or wait till the skies are a little clearer. So at the moment, looking like these markets are going to start taking some fire, and so I encourage everyone to just be defensive here throughout the remainder of this week. Thank you, everyone, for tuning in tonight. That's all we got. We'll catch you guys tomorrow.